Well, let's welcome in Anshul Saigal. He's head and executive vice president at Kotak PMS, and he's joining us right now to take some questions. And by the way, I think Anshul will share some of that happiness and optimism because he's someone who bought Bajaj Finance, and that too, at a very, very good price a few months ago. Anshul, talk to us about how happy you're feeling. I mean, outstanding results, and of course, the stock performance is there for all to see.
Hi, Prashant. One of the things that one has learned over the years is that if you get good executors, good management, good executors, and good businesses, your money works very hard for you, and all you've got to do is just relax, put your legs on the table, and relax in your room. Sit on the chair, and the money will work hard for you. This is one such name which has been working stupendously well. The management has executed spotlessly over the last 10 to 15 years and compounded the way it has. But having said that, 3-4 months back there was a shadow of doubt on competition, on how things were panning out in the business, etc. Which is why the stock was trading at actually pre-COVID levels. So 3 years had passed and the stock really had done nothing. The expectation from the street was that earnings will more or less double in 2 to 3 years. And that meant that this was probably the fastest growing Nifty stock in terms of earnings. And then while you have, while you talk of the scale, but you've got to see it in proportion. They're about 2.5 lakh crore in balance sheet size. And yet they're only 2% of the Indian overall credit system, a system which is growing at 15%. So if they keep taking market share, this is a very small scale in terms of the overall credit system in the country. Fast-growing company, high ROE, quality management, trading at tough valuations. At that time, it seemed like a heady combination, which had room for little downside and material upside. And we are a happy lot today. So we are rejoicing. Today's move has also what has happened in this name over the last few months.
So Anshul, you had very strong conviction to buy Bajaj Finance a couple of months ago when the stock price had fallen quite significantly. At current levels, do you have, the same kind of strong conviction for any other stock, or for which stock do you have that kind of conviction?
Rima, tell me if you like something. I'll go research it. This is a tough market. Everything's rallied a lot. It's not easy looking for names in this market. However, I'll tell you that, despite the rally, if you look at the pharma space, particularly the mid and small cap segment in the pharma space, that has really gone nowhere over the last 3 to 5 years, even longer, in fact. And in our judgment, that's where you can find opportunity at this time. Some of the names, they've added capacities. Those capacities are underutilized. You are seeing shortages of drugs in the US. Many of the existing suppliers to US, those are exiting the country because price competition is just so severe. And that means that there is no room for prices to go down in particularly US, because it is the largest market for pharma. And if prices do go up with capacities underutilized, the operating leverage can be massive. And which is why we think that with valuations, again, over the last 3-5 years, even longer, having gone nowhere, and earnings being tough as well, this space looks quite interesting. Along with some financials. Financials also look interesting at this time.
Okay. So those are some of the sectors that Anshul is looking at. Anshul, good afternoon. I'm going to go back to the sector that Prashant was discussing just a while back with our previous guest, just because it makes for great conversation, right? And there's a fair amount of action there. Yes, I'm talking about alco beverages. We all started, discussing happiness in a bottle, which is today's trigger on Radico. But look at Sula as well, right? I mean, there's a story here, isn't it? I mean, both Radico and Sula are up almost 35% in this calendar year itself. United Spirits and United Breweries, they've been underperformers. But there is a story, a premium consumption story in urban India that seems to be playing out. The question is whether you think it has legs to be a long-term story and whether you like the price points currently. So what's the sense?
Hi, Survi. Yes, you're right. This is a space which is interesting, no doubt. Demographics work quite positively towards, if you want to build upsides in demand in this space, those are tremendous. There is competition definitely, and some of the listed players need to get their act together as regards competition. They've lost market share. And if they do get feet on the street, get their act together, clearly with some of the brands that these companies own, upsides can be quite material. And going forward, as you rightly mentioned, the growth is going to be value adding because you're going to see premium brands actually being sold more, and that will mean margins will expand. Again, the story remains the same, that some of these names have done nothing for 6-7 years, or thereabouts, maybe 4-5 years, or around that time. And if earnings do surprise on the upside, then upsides on the stock can be quite material. So this is an interesting space. There are bottom-up opportunities. And one, if you're a discerning investor, there is money to be made here clearly.
Anshul, another space where you think there is money to be made is the ethanol opportunity. And I think, here you've owned names like Balrampur for a while, but you own other names as well. I mean, if you want to talk about this, and is that something you're still buying? Again, stocks here have done quite well. I think that says without saying for most sectors right now. But from here, how long a view would you take for this space?
Prashant, actually, this is a space, when we talk of ethanol, the first thing that comes to mind for most participants in the markets is sugar. And because sugar is a cyclical sector, they try and stay away from this space. But ethanol is a secular growth story in this space. India needs to blend 20% of its petrol with ethanol by 2025, and we're only at about 11%. So we need to double our production by then. And this is only petrol, which is 20% of the overall oil consumption in the country. If we were to start blending diesel, then the demand for ethanol will be 4 times what it will be by 2025. So this is a secular growth story, and the sector as a result is becoming far less cyclical as it used to be earlier. And which will also mean that sugar prices will be supported if there is a failed monsoon, even more so. And given the dynamics, this is a space which to us looks very interesting for the long term. Short-term volatility aside, if you're a long-term investor, this is a space which in our judgment, both on the sugar side as also the service provider, maybe capital goods side, this space offers opportunity. And we are quite positive on this space.
Getting back to the opportunities that you see in the small and the mid-cap pharma space, does it also include hospitals broadly? Today, for instance, Aster DM is higher in trade. It's up close to about 12%. There is the much-awaited restructuring where they are planning to sell their Gulf business. Binding bids should be in soon. Once that takes place, money will flow into Aster DM. Maybe shareholders get rewarded. That's a stock higher in trade. We were chatting with Metropolis. Does diagnostic make the cut right now? Because the sense, Amira Shah was indicating was that, they have been able to push through price increases in select tests in the last few months. Competition appears to have eased. Can you throw some light on hospitals and diagnostics?
Yes, Rima, actually hospitals is a very interesting space there is no doubt that that's an interesting space in terms of demand pattern. But what if you look at the numbers over the last 3 to 4 years, you will notice that EBITDA margins have really expanded meaningfully. Along with EBITDA margins, their valuations have also expanded. So companies that used to trade at anywhere from 10 to 15 times enterprise value to EBITDA are now trading at 25 to 30 times. And this is on expanded EBITDA margins. Now, again, when you have this combination, you've got to be slightly cautious because you may be paying premium multiples at premium margins. Now, if margins have room not for upside and they have room for downside, then there is clearly going to be a contraction in multiples. And you don't want to be in that mode which is thinking. So in that sense, one has to be cautious in this space. It has to be a much more stock-by-stock sort of approach rather than a sector-wide approach in the hospital space. As regards the pathology lab space, we have thankfully stayed out of this space in the recent times because, again, our belief was that competition intensity was going up in this space. Multiples were quite extended, and that meant that there was room only for downside, not for material upside. And many of these names have halved and more in the last 1.5 years. Now, when expectations are low and people think that recent uncertainties are going to play through into the future, we think that this is a space which is worth looking at. You may not want to invest immediately, but clearly this is a space where one should be researching given that expectations are low and valuations have eased off. So we will be looking at pathology labs and in hospitals we will be very stock specific rather than sector specific.
Okay. All right. Anshul, we'll leave it there. Thank you very much for your time. It's a pleasure, as always, having you with us here on CNBC-TV18. Thanks,
you indeed. Prashant. Thank you.